Good morning, traders. Welcome to the TMT Trader Edge Report for Friday, December 22nd. So quickly, I'd just like to wish everybody a happy holiday season, Merry Christmas, Happy Hanukkah to all of you out there. It's going to be a nice weekend. Today is the last day before the Christmas holiday, and then we begin our New Year's week, and we'll have very light trading going into next week. As we all know, Monday we're closed here in the United States, so we just have to be very patient in our trading moving forward. Now, I showed this chart to you early in the week. Here is the JNK SPY, which is the high yielding junk bond ETF, and this is a very important chart to see. Now, it might not happen today, tomorrow, and I don't think we're going to get any type of sell-off at all the next several days going into the new year. But I have to be very careful. Markets are rallying in this whole euphoria of buying stocks at all-time highs, and the JNK is diverging to the downside. So this happened here, as you can see, back in 2015 and 16, where 2015 we actually started our descent in the JNK, and then 2016 we really dipped lower, which brought that 5 or 8 day sell-off pretty hard actually into 2016. Then obviously it recovered here, and then we recovered as well. But if you look back, and you could do your own homework, if you look back back in 2000, you'll see we had a same approach from 2000 and then 2009 when the markets actually rolled into a bear market, you could see. So this very similar pattern, history does repeat itself. We just have to wait for the timing mark. But this is actually very important here. When you have yields flattening, right, and you have depressed volatility, there's only one way this goes, and volatility explodes to the upside and the markets go down. Now, the thing is, the timing is the issue, right? So we have to wait for our timing and wait for our sell trigger that we're going to get in the markets, and I believe that it probably end up happening sometime in the first quarter of 2018. Right, next I want to show you just the spiders. We had an inside day for the last 3 days. We filled the gap in a lot of the indices from the gap up we had on, I believe it was Tuesday, and now we're just kind of going sideways here. Not a bad thing. It kind of unwinds its overbought reading. We're still overbought in our MACD and RSI, but you can see volume really is diminishing as the markets are just hanging in there. These are your bigger levels here off our algorithm: 266.53, 264.80. That's the bigger picture one right there that I'd be paying attention to. I wouldn't short the market if you are looking to do so, especially in a dull market when you have doldrums here, the holidays, and there's really no one to push them. Usually, generally, the market just goes higher, so I would not look to short the market at all. If anything, look for a deeper retracement to buy, and then look for you take profit areas. Okay, just want to cover the CF. Doing very, very well. I think the CF is ready to either give it a little bit of a pullback down to the 21, which would be a better buying opportunity from here, 38 down to the 37 area, or you see the sideways consolidation. This is actually very, very bullish. Or take out the consolidation and really start to make a run for it. Okay, now that's something that you want to show you. Put on your radar. This is actually a very good chart, higher highs and higher lows. So to me, I'm looking for a pullback. And maybe we get some tax selling in the markets where the markets do pull back a little bit. But this would be a great looking buying opportunity for a nice little recovery here in a CF. Now let me show you another chart where I'm paying attention to. It's not actionable at the moment, but this is the OYH, the Oil Services ETF, and this has a beautiful ascending triangle with higher highs and higher lows. Lots of volume here yesterday. Now remember, if crude oil, the commodity, gets obviously soft and starts to sell off a bit, obviously the oil services is going to do so as well. But I really like the chart. I like the increase in volume here. Yes, we do have an ascending triangle where the apex could continue a little bit more, but you could see here higher highs and higher lows. I love these. When I see this, I just love to pay attention to them. The 200-day coincides perfectly with the 2617. That's that area that needs to get taken out on a closing basis. I'd like to see 2 closes above it and then look for a spot to get long. But pay attention to the OAH. I do love this, and this is coming off the bottom. All right, so this is a nice little spot here. You could see coming off a bottom for a nice little recovery rally. All right, where does it go? We'll put some numbers out there once we break up, but that's going to be a spot for that I'm going to be paying attention to for today and actually going into next week. Have a great day, guys. Enjoy the holiday season. Enjoy the Christmas holiday as well, and we'll see you next week. Take care.